everyone, and welcome to your Daily 5. Today is March 1st, and it's the official launch of Women's History Month. So I'm really glad I get to be with stock charts on the first day of that historical month. Anyway, we have a lot to talk about. My name is Michelle Schneider, Mish, by the way, and of MarketGauge.com. So let's really roll right into it. Okay, so we're going to talk about a little bit. I'm not going to show you any of the actual indices because we all know that the market continues to be in this very persistent and stubborn trading range, particularly when we look at the SPY. Really, actually, at this point, we're talking about a range within a range. The bigger range that we've been watching for was 3,200 to 4,200. We got up to around 417, 418, and now we seem to be in a mini range within that range between 3,900 and let's call it 4050. So right now that range persists, which is really typical of the stagflation environment. But there are always emerging trends, and that's the stock picks I want to show you. And of course, because of who I am, they're going to be very heavy in commodities. So the economic modern family is definitely guilty of the trading range, but what is interesting about it is that we also happen to have all of them pretty much in bullish phases at this point, which means that even with this correction, if you look at some of the market breadth, it's still relatively positive. No reason to ask why, other than the fact that the market still obviously believes that the Fed may not be as aggressive. I think that would be one reason. Another reason is that we have a lot of retail money coming into the market. But what is really undercovered are some of the stocks that we're going to talk about right now. For natural gas, silver, Floor Construction, 3D printing, which is actually 3D Systems, which reported. This is Tencent Music, Century Aluminum, and then, of course, the ETF for solar energy. So let's get going. All right, so let's start with natural gas. Those of you who follow me on Twitter at Market Minute or read my daily, Mish's Daily, on our website, that's also posted in many different places on social media, know that a week ago, I wrote an article about energy and the potential bottoming for natural gas. And again, we don't really necessarily need to get into a lot of the fundamental reasons other than the fact that, the big decline had to do a lot with full loads of natural gas available, of milder winter in Europe. And now here we are, basically we got to a very oversold situation and we held the Bollinger Band perfectly. What I find so interesting right here is that on our leadership plugin, it's actually starting to show outperformance to the SPY. And then if we look at real motion and our momentum indicator, we did have a mean reversion while the price was still declining. However, we started to actually neutralize in momentum. And so that's really when we started to get interested, not only for that reason, but also for the point of the fact that we have a bottoming formation, which means it made a new 60-plus day low, and then the next day closed above the high. I'm going to try to switch here to candlestick charts. I'm not sure why that's not happening. So why I'm pointing this particular instrument out to you right now is because I do not believe it's necessarily too late to get involved in natural gas. Of course, it would have been great to get in at around 740 and be happily taking profits at this point. But if we hold above, and I'm going to say 8 to 840, or 835 even, because that's where this Bollinger Band is, with an inside day forming, if we can get through this high right here at 916, which was the high of Tuesday, then that tells me that we could potentially at least see a move up close to around 11. So we still would have a relatively good risk reward. But more importantly, as an inflation, if we start to see natural gas take out those levels and continue to go up, and we see any kind of shortages start to emerge or demand really rising or any problems with getting this stuff out for delivery, then that would be another reason for inflation that the Fed can't necessarily control. And on that note, we're going to take a look at silver. So I have often said that when silver or gold starts to look really terrible, is probably always the best time to buy it. And so I put out a tweet on Tuesday that said that it looked like silver was about to turn around. It certainly fit the definition of looking terrible. And if we take a look here at our real motion indicator, we had a gorgeous mean reversion trade right where we are at the 200-day moving average. So silver is another one, long-term very bullish. We're not quite outperforming yet the SPY, nor are we outperforming the gold. In fact, we're underperforming. That could change. That would probably be a very, very inflationary scenario. But in the meantime, just looking at silver itself, you had a low of 1889 on Monday, and then again on Tuesday, a low of 1890, so that we could say that's almost a double bottom, also a reversal pattern with follow through today. Now the low of here is 1955. The high today so far is 1947. I would probably say at this point, we would want to see this gap filled, and then any dip from there would probably be a good buy opportunity. And depending on your time frame, whether you want to hold to under the lows or hold to under today's, if it confirms over the 200, I still think longer term silver should go up. The next trade is one that looks very different. And I've talked about this one a lot, including even on this show. And I'm actually going to change this with a hyphen. Hold on one sec. And that's floor construction. Actually, Dave Keller and I talked about this stock, and also it's in an area that we think the industrial area could actually do well this year. Now, this has been in a giant sideways compression. It happened before and broke out. It never really went anywhere. But at some point, this thing is going to take out all these highs. And I would say a good place to look at right now would be a close over 37.50. And I mention a close because if you look back, we have not had a close over 37.50. So on a closing basis, 37.50, you have such a good risk to under the 50-day moving average. You can see how well it's outperforming. And then on the real motion indicator, it's finally now, after all the sideways compression, starting to take out its 50-day moving average, which tells me that the momentum is starting to increase. So keep that one on your radar. An old fave of mine, which is 3D Systems, reported earnings and did a lot better than what people thought. Now, this was a stock where it was trading down here at 6 or 7. We were thinking to ourselves, how could this possibly go any cheaper? I mean, this company's not going out of business. But nonetheless, it made this huge move with the market, came all the way off, and look how nice it sat into earnings on the 200-day moving average. So we've got obviously the leadership starting to take over, the momentum starting to take over here. It's had a nice bullish cross in momentum, not yet in price. But nonetheless, after this big move today, I would probably give it a little bit of time for the dust to settle. And if we can get back down, say around 10.50, that might be a good buy opportunity with about $1 risk. The next one is actually one that I like more on a weekly chart than I do on a daily chart. This is Tencent Music. This is a Chinese stock. And so everybody knows about Baba and Baidu and BDD and JKS, which I've also featured in the past, which is a solar stock. But this is a small stock, and it's one that I wrote about in my 2023 outlook. And the reason why I like it, I'm going to show you the weekly chart in a moment. But one of the reasons why I like it is because obviously you can see, first of all, it's been in a big bull trend. And you want to talk about sideways. This thing has gone sideways. Today, it's starting to outperform the SPY as I'm talking to you. And guess what? Having a mean reversion trade. So that tells me with the resistance right here at the 50-day moving average, it probably behooves you to wait for it to clear that 50, maybe for a couple of days. And then you could very simply risk to underneath the low here of 737. So essentially, you're talking, again, about $1 worth of risk for a stock if we switch to the weekly time frame. Considering it's been holding here and it just has made a nice gentle correction, could potentially take a move up not only to the 200-week moving average, which would be an amazing risk reward just in and of itself, but if it takes it out, you can see that the high in this stock goes back to here, which is in 2021, March, where it got up to around 31. So I would definitely keep my eyes on this. It's sort of the Chinese version of Spotify. Two more to talk about. One, again, I wrote a whole article about it. I've been tweeting about it, and it kind of took off a little bit already, and that's Century Aluminum. AA would be another one to look at, Alcoa. But right now, this one made a big move over the last couple of days. And this took out the 200-day. Now, obviously, today we're having this major big move up. Oh, I'm sorry, this is a weekly chart. Let's go back to daily chart. On the daily chart, it made a big move up over the last couple of days, exactly when I wrote about it, by the way. And look now, we're getting into some resistance. But I want you to keep an eye on it, because if we get through this resistance, I would say you could probably risk pretty tight, maybe not that tight as what I just showed you here, but maybe a move under 1075. And to see how much legs this has if it clears this Bollinger Band. Now we can go back to the weekly chart because we want to look at some history in here. You can see that just in 2022, before the rates really got tight, this thing was trading also up at around 31. So keep an eye on this one. Like I said, it would have been great if we had gotten in, and I got an opportunity to show you this more when I really took off over 1140. It took out all this compression. But nonetheless, it still could be in play. And then the last one I'm going to show you here is Solar Energy ETF, because First Solar also had an amazing report. And First Solar is actually up 13% as I'm talking to you, or up over $22, making new highs. Incredible. And TAN is hitting right at the 50-day, let's make sure I'm in the right time frame. Yes, daily. 50-day moving average, right into resistance. Obviously, you can see the leadership has come back. And in terms of the real motion indicator, it's moving up. But I think if it corresponds with a move over the moving averages in the momentum indicator and a couple of closes over the 50-day moving average, you really could actually just risk probably to just under this gap low that we're seeing today, or just under 75, to see whether or not this area has legs. So that's it for now. Give you a varied amount of stocks to look at. Hope that you enjoy, and I'll speak to you again soon. Thanks so much for watching, and bye for now.